Right, sweet, we'll get started. I'll just post a live now message in main chat. Just want to apologise in advance to everyone. I'm a little sick at the moment, so I'm sniffling or coughing every now and then. I do apologise. I'm okay to stream, so I thought I'd get it done anyway. There's no point whinging about it. Sweet as. Sweet man, I'll take a look at Gala at some point. It's actually on my watch list already, so we can take a look at that. Alright, we'll take a look at Bitcoin first. Frame a bit of a bias for the rest of the week and for today specifically. So obvious one here is that we haven't been able to take this high yet, formed a lower high before a retracement. I wouldn't even call this a retracement. We've got, if I pull fibs from this swing low up to this swing high, you can see the 0.62, 0.705, 0.709 lines up with the tap into this bullish order block, which hasn't been touched yet. And can you guys see the fair value gap? It's only small, but there's also, I'll give you 10 seconds to try and see it before I show you. It's only tiny, but it's right in the middle of those optimal trade entry range fibs. Alright, so tiny little fair value gap here, which lines up with our golden pocket fib at 66k. This is on the daily. I do like to use the double EMAs for a bit of a momentum indicator and a bit of a dynamic support and resistance indicator. If it's cross bearish, obviously I'm more inclined to be looking for short entries and for it to be acting as dynamic resistance, and vice versa. Right now we're cross bullish. You can see it tapped down and kind of wicked off and looks to be using it as dynamic support on the daily, so this gives me more of a bullish bias for the week. But dropping down to the 4 hour, we've kind of got a bearish cross, and you can see price is trying to push through the bearish momentum, but we're kind of at a decision point. You don't really want to be using these unless they've really flared out. Like you can see here, back here, there's a big flare out, and that's obviously more indicative, and you can be a bit more confident that we're in a bit of a bullish momentum. We've flared out here, but not massively. But yeah, you can see that price is kind of struggling to get through that. So my bias is more bearish for the day, and that's a good thing for me with a weekly bullish bias, because I do expect early week lows in a bullish market. You can also see the 200 MA is kind of sitting just below range equilibrium, which is the 0.5 on the fibs. Looking at, yeah, so I've actually posted a pro alert on a Bitcoin long entry. That'll be a bit of a swing for the rest of the week if we do get tagged in. We'll move on quickly anyway from Bitcoin, because yeah, the bias is quite pretty straightforward. It doesn't take too long usually to form it. You can see that the retracement on the daily, like I'm definitely prepared for a retracement down all the way down to 65k. I wouldn't want to see price break below 67.66 roughly. Otherwise, you could get price action kind of, say if we did break below this, you might get something like that, which, you know, it's still bullish, like all the way down here. There's a lot of fair value. This whole this whole block is a fair value gap. We did tap into it here before it moved to the upside, but you know, we can obviously mitigate the entire fair value gap range before continuation. But yeah, we'll move on from Bitcoin quickly and we'll start looking at some altcoins with the bias in mind. So when you're especially looking for swing setups for the week, you want to be setting a bias on Bitcoin first, and then moving on to altcoins. So you want to be quite confident in where you think Bitcoin could be going before moving on to altcoin setups, as we know that Bitcoin's kind of driving the market, especially at the moment. Bitcoin dominance is up. Any move on Bitcoin to the downside is kind of dragging the market down with it, and vice versa if it's moving to the upside. So we have to be prepared for that when looking for altcoin setups. So yeah, we'll move on now from Bitcoin with our daily bias in mind is bearish, but our weekly bias in mind is bullish. So I'm going to be looking for altcoin swings for this week. I don't really want to be looking for shorts in this market. I would prefer not to. We're still bullish for sure. So we'll start looking for some long swing setups for the rest of this week. EOS bores the hell out of me, so we'll move on. I do start on the 4 hour when looking for swing setups. I do like to see price trading above this 200 MA, so that's usually my initial indicator for looking for a long. Obviously Rose is trading below, so I won't be looking for a long on Rose. That price action looks trash, I'm not touching it. TRB, no. Gala. If we pull fibs from this energetic low to high, we kinda... Gala looks okay for a long from a swing perspective. We haven't touched this fair value gap, so that's something to be mindful of. That kind of lines up with our final entry on the OTE range. We have tapped the initial and kind of reacted to it, but it's been quite weak. So, and with our daily bias of Bitcoin potentially coming down, you could expect a further move to the downside for altcoins, obviously, and we could hit this fair value gap range. This previous bearish order block, which is what we call a breaker block, so this is a previous bearish order block. I'll label it as our bullish breaker block. Lines up quite nicely this whole block with our 200 MA as well. So I'm just going to write down, instead of doing the pro alerts now, I'll write down the entries for each before we move on. So I actually do like Gala, so I'm going to write a pro alert for it. 0.06033, 0.06, 0.05896. And our stop loss would be below 0.05488. So it's definitely going to be low leverage, and I wouldn't be playing with higher leverage at this stage anyway. You want to be looking for swing setups at this point in the market. obviously we have no confirmation of a substantial move to the upside right now, so we're looking for retracement moves into order blocks, fair value gaps, retests of breaker blocks. So the reason why breaker blocks are effective is it's a confirmed breakout of trend, right? So I'll remove all of this. So back here, we'll go to a replay. So we'll go to around here. You can see price is in a downtrend, right? So we're downtrending, lower highs, and then once we get a break above, so this is all just bearish order flow. Sorry, it's moving quite slow, but we'll just continue anyway. I just want to show you why breaker blocks are important to me, and how they can be used to form entries. Continue downtrend. So price is failing to get above this high, right? I'll just skip back to it. It's probably easier to just show you. So downtrend all the way down here, and then we got, this was the final bearish order block, so it's the up close candle before we had to move to the downside. Also lines up with the fair value gap, also lines up well with the 200 MA, which you could expect to get retested before potential continuation. And the reason why that is important is because it's confirmed a break of bearish trend. So we broke through, we actually formed a fair value gap in between, within the bullish breaker block. So it's just added confluence that this area could be retested before potential continuation. So you can see that the OTE range on the fibs above the bullish breaker and the fair value gap, but that we're also below the range equilibrium, so we're trading in a discount of the range. So anything in a discount of the range, yes, I'll check RVN, no worries. Anything in the discount of the range you could consider to be a buyer. So we're below the blue line, which is the range equilibrium. We're in a discount. Anything above, you kind of would consider selling. How I find ranges is you want to be pulling your fibs from energetic moves. So you don't want to be pulling your fibs from like here to here or anything like that. We can see that this is a significant area to be pulling your fibs from this low to high, because we broke out of the downtrend at this area, and you can see the energetic move we got to the upside. So from the swing low, so from the down close candle before the energetic move up to the high, and then yeah, you can see that we obviously tapped the 0.62 already. I'll be doing an alert on Gala, but yeah, it's definitely going to be a swing, because I'm prepared for drawdown even below the optimal trade entry range, and looking for a retest of this block specifically, which is the breaker block and the fair value gap retest. So final entry would be, I would like it to be around the equilibrium of the breaker block at 0.05744, which I'll write down 0.05744. Alright, so we have all our entry points for Gala. Targets are obviously previous highs. So our initial target would be 0.06985, 0.07111, 0.07298, sorry. And then from that high, I'd be looking at 0.07997, which is just below the 0.08, and we do see retracements at times when price is looking for a new number, so 0.08, 0.09, etc. You kind of see a bit of a retracement. People kind of psychologically think, oh, it might not break 0.08, so they begin to sell. So that's also a decent point to take profits. But yeah, we'll move on quickly. We've got our Gala entries. If you guys have any questions, ask them. I'll happy to answer. This was a trade that we got the other day. I was actually speaking to Caspar about this in direct message. We just missed fucking 206, which sucks, but we did get a good entry. Our initial entry was the 0.62 at 180.55, which I did alert in Pro Alerts. So yeah, that's a nice move from our initial entry. You can see it tapped into the FVG, which yeah, no, it was a good move for the week. You can see how well the fair value gap was respected, and the fair value gap lined up with our optimal trade entry range on the fibs. So we got our initial entry at the 0.62 fib, and then a nice reaction. You want to see a nice reaction from these areas. So if it's the reason why I close trades early is if we don't see a nice reaction from these areas. So if price, for example, I'll just make an example. So we want price. So price has moved to the upside. It's failed. It's coming down. If it hits the 0.62 and just does these ones for forever and kind of doesn't make a move to the upside, I'm cutting. I want to see a move. So for example, come down. I want to see quite a nice reaction from this area. Yeah, it just lowers the probability of if price is just crabbing around below in discount, it could be looking for lower. So you want to see a reaction from the area you're interested in. If you're not getting a reaction, it's probably going to be looking for lower price points. So you have to be prepared for that, and closing a trade early is completely fine. Even if it does end up going your way, the odds of that happening after a significant amount of time has passed just lowers. So you're just adding more risk. But yeah, I'm not looking at anything from Sol right now. I would, we got to play on it last week, so we'll move on. There's other coins to play, obviously. Sedge Z showing me nothing. We'll move on. GMT, we're holding the 200 MA. We did break bullish order flow though. I would have liked this block to have been held, and you can see price actually retested that block and then rejected off that block. If we move into the hourly, there's the price action's trash on GMT. We'll move on. Sand, nothing for me. Trading below the 200 MA. That's my initial indicator. We move on. Below the 200. Below the 200. This also looks crap. OP, not much. FTM. Yeah, that was the see. We had a setup on now, but we tagged SL at entry. I would want to see something like this before jumping on a long. So a break above that order block and then a retest. So that would be an entry point. So that's the bearish order block. This is the bullish. That would turn into a bullish breaker block, and then we would want to see a bounce off that. So I would look for an entry in that block and then continuation. You want confirmation, all right? Right now it's kind of a knife catching market. There's no confirmation on trend. We've got the bearish daily bias. Yeah, no worries, blanket. I'll check Pendle. It's actually on my list at the bottom. So yeah, at the moment, most coins are in a local downtrend. As I said, we want to wait and see a break above bearish order flow, which we're not getting on most coins at the moment. This was a crazy trade on Bitcoin Cash that we caught, which was in Pro Alerts. We had a 401.8 entry, which was, this is a breaker block, so you can see that's our breaker block. That's the previous bearish order block. We came down, we broke above, and what I was just talking about, so we've confirmed the break above, and we're looking to get in on a retest of that previous bearish order block. So that was the previous bearish order block. We got our entry and we got a nice reaction, so we caught a move from 401.8 and you could have rode it all the way up. And that's why you leave moon bags, and that's why you trim on the way up. You'll find that you can make the most money on your last 25% position size. Yeah, BCH was insane. I was happy with that, with this setup for sure. But you should be trimming all the way up here, and you leave your 25% moon bag, your final portion of your position size. You leave for this move. So yeah, that was a great trade. We'll move on though because I'm just not touching that. We caught the move. I'll get rid of all this junk. Here's another example. Algo, bullish breaker right here. Retest. Move to the upside. We'll get rid of the drawings anyway. We'll stop fucking flexing. So yeah, we're trading below the 200 MA. Kinda. Nah, it's nothing I'm interested in. Looks like market wide we're kind of just seeing no confirmation of a break in local downtrend right now. Now is not the time to be market smashing. We want to be looking for. You can see that Ahmad posted a few orders to be filled, and that's exactly the right move. He's looking for lower price points at this stage, which is higher probability at this point. You don't want to be starting your trading day. You don't want to open a computer screen and go straight to like the 15-minute or the hourly. You want to be looking at the higher time frame, at least the 4-hour, to start your day, to frame a bit of a daily bias. And you can see market wide we're in a downtrend. We want to, as I said, we want to see a move up, a breakout of bearish order flow, and we get in here. so at the previous bearish order blocks. So do you guys understand how to find bearish order blocks, or bullish order blocks? They're honestly they're quite simple. I explained it last live stream, but in case there's more new people here, we'll explain it again. So, for example, for a bullish order block, you might have a pocket here where you've got a down close candle. So that line there is the down close candle, and then you get a nice move to the upside that breaks above that down close candle. From here, you want to see a retest of that down close candle and then continuation, but we get in on the retracement. So the down close candle, so this area here, is our bullish order block. So the reason why it's a bullish order block, and it's confirmed a bullish order block, is because we got a move to the upside that was substantial, and then you see a retracement into it, which could be an entry point, and then continuation. So and vice versa for a bearish order block. So a bearish order block is an up close candle, so price would be coming up, and then we get a stronger move to the downside. A retest into that block is the entry point. So the up close candle, that's our up close candle, and then that's your entry point, and then you're expecting a larger you're expecting a larger move to the downside. So they're quite easy to see. I do recommend training your eye, because most indicators, I don't know, most indicators I've used regarding order blocks, they kind of differ. I'm not sure whether it's the coding, the way they've been built, but I do definitely they're easy to find. I do recommend training your eye. Like you can see here, an up close candle and a move to the downside. So what's that? That's a bearish order block. You could use this whole cluster as a bearish order block, because this is most likely a bearish order block on the daily. So if we go up to here, yep, you can see that up close candle is a daily bearish order block. So if you're on the 4 hour, those 3 candles, or all these up close candles here, is the entire daily bearish order block. But yeah, so at the moment there's no confirmation of a break of downtrend. You could look for shorts, because as I said, we have a daily bearish bias on Bitcoin. So from here, for example, you could pull your fibs from this swing high. We've got a little retracement to the upside. I'm actually going to set that as an alert, and we'll see how we go. So storage 0.07677, 0.07742, 0.07808, and then I would have my final entry at this actual order block, at a test of it. So I would set my final entry at 0.0869. We would keep our stop loss fairly tight, because we're still in a bull market, right? You don't want to be you don't want to get caught in the upside move without a stop loss, or with a too roomy of a stop loss. So that wick high, if price is truly bearish, it shouldn't break above that high. So we'll set our stop loss at 0.080. We'll just set it at 0.081 in case we do get a bit of a sweep above 0.081. So that's a valid short setup. We've pulled the fibs from the bearish order block to this swing low before a small move to the upside. If we don't get the move, that's completely fine. You can see that the 200 MA lines up with the 0.79 almost exactly. And as I said, we can kind of look at the 0.79 as a area of dynamic resistance. The 200 MA as an area of dynamic resistance. So we could see something like that, retest of the 200 MA, and then further move to the downside. And that's why they call it knife catching, is because a lot of people are seeing this little move here on like the 15-minute, and they're like, oh, it's a reversal, it's moving back to the upside. But on the 4-hour, you can just see there's very minimal movement to the upside. There's no confirmation of a change of trend, and that's why you get people that are riding this stuff, and then it just completely fails and heads down. And sorry for the squiggle, that's disgusting, but yeah, I'm sure you get what I'm saying. And that's exactly why they call it knife catching, is because you're literally just, there's no confirmation of a change in trend, and that's what we want. So we've got a long setup on Gala, we've got a short setup on Storge. Honestly, you could go for short setups across the board right now. I'm actually feeling quite sick right now, so I'm not sure how much longer I'm going to be recording. Starting to feel a little bit nauseous. Cheers, SD man. Yeah, I've got COVID at the moment. Someone from my work came to work with COVID and spread it around, so not feeling too crash hot, but I thought I'd be alright for streaming, but the brain's starting to slow down a little bit. Adam looks like a decent short. Confirmed trade below the 200 MA. I'll get rid of the a fair, pretty spot on. Zero zero 0.076. guys hear me? Can you guys hear me? Sorry, I don't know what's up with this thing. So yeah, across the board, I would actually be looking for some short setups. You can see optimal trade entry range lines up well with the. Thanks, Blanket Man, I appreciate it. Hopefully I'm on the tail end of it now. But so what I would be looking for if I was you guys is I would be looking for price broken below the 200 MA on the 4 hour firstly. And then you can see we can use this fair value gap, which lines up really nicely with our optimal trade entry range as our entry points. So look for the 200 MA trading above price at the moment, and then pull your fib from this bearish order block, so the swing high to the swing low. I don't use wicks, I only use the bodies to pull fibs. So I'd go from the swing high to this swing low. We can see that the optimal trade entry range, so our entry points line up well with the fair value gap, and I'd be waiting for price to retest that and looking for a subsequent move to the downside. No point fighting the trend right now. So that's the general model I would be using right now to look for setups. I wouldn't be trying to catch longs right now. There's no confirm of change in trend in local trend, so we're definitely in a local downtrend right now. So we have Atom, Storage, and Gala setups right now. So we'll move on. If you guys have any questions, ask. More than happy to answer. Here's another example. Dot. It retested the 200 MA, rejected it, and we have a nice fair value gap as a potential entry point for a short. So we can pull our fibs from this swing high to this swing low, move it across. We can see the optimal trade entry range lines up really well with the fair value gap, and lines up well with what I would anticipate the daily bearish order block. You could use I'd use 9.8 as my stop loss, and anything that trades above the 0.5, so range equilibrium, is what. Can you guys answer that question? What is price considered trading above range equilibrium? It's considered a premium. So it's an, yep, exactly, MacBain. It's an area where people would be considering selling within that range. So that's exactly where we want to be sellers. So that's exactly where we would start layering in our entry points and selling subsequently. So we'll move on. Dot is also a valid setup. I'm having trouble talking now. Just keep getting this coffee into me. Hopefully it I don't know, kickstarts me. But yeah, basically, I'm actually going to wrap it up here. I'm super sorry, guys. I'm not feeling too crash hot. But yeah, I gave you the outline. So the reason why you would see that entry point as not continuation of upwards movement is because the entry points are still below a break of trend direction. So unless price broke above this bearish order, so price would need to break. So say if it did something like this and broke above this block, you would then consider flipping long, and you could look at. So what is a previous bearish order block? I mentioned it earlier. If anyone can answer, that would be awesome. I would like to test your knowledge a little bit. Yep, exactly, Magbane. He's all over it. It's a breaker block. So a breaker block is a break of structure. So it's a break of bearish structure. That's why it's called a breaker block. So this was a it is a bearish order block. But if price broke above that bearish order block, it's now considered a break of structure block. So you could use the break of structure as a potential support area. You could consider it as an area of what we consider support. So price could then retrace back into that breaker block, and we could flip long and get in on the trend. But right now, our entry points are below that breaker block. So there's no confirmation of trend change. So our entry points, and this is what I'm talking about with knife catching before, is that people see a bit of an upwards movement and they're like, oh, like we're changing trend, like we're going up, and then it'll hit a bearish order block and reject. And that's why people get caught knife catching, because there's no actual confirmed change of trend direction. It's just respecting, it's just forming lower highs and continuing down. So you'll always see price, I'll get rid of the drawings, you'll always see price, you won't see price doesn't just go straight up, right? So if you're in a trade and it does something like this and keeps, like, price goes, it moves like this, right? It doesn't just go straight up or down. And that's why order blocks are effective, is because your order block, so you've got a move up, you've got a move down, and then another move up, and then the down close candle. That's how you get in on trend. This is how you get in on trend. You get in on the retest of the of the order block. That's why order block theory works, is because it's allowing us to get in on the trend. We don't want to be getting in. You can if you want, but I don't do this. You don't want to be getting in at a energetic move to the upside. I don't chase momentum. A lot of the time, you definitely can, but that's not how I trade, and that's, to me, it's low probability. You're just gambling. You want to be getting in on confirmed retracements into order blocks, fair value gaps, etc. So yeah, I hope that answers your question on how you can be confident on the entry points even when you're getting a move to the upside. Like, I don't want to be catching this move down here. I want to be looking at a move into this order block. You'll have buyers in this move to the upside. You'll have people going, oh, like, we're saved, we're moving up, but there's no change in trend direction. And that's exactly what price does. It induces liquidity. So people are buying in here, it's inducing liquidity, and then it takes that liquidity from you. So unless it broke above this order block, it's a valid short from within this area. It's a valid short unless it broke above this wick, and then you could look to flip your bias. You don't want to be stubborn with your bias either. If you do see a move to the upside that changes trend direction, flip your bias. Don't just hold your setup and stay stubborn on your bias and on your opinion of where price could go. Because at the end of the day, it's just educated guesses. We're all guessing. I'm guessing. You're guessing. But yeah, I'm gonna wrap things up here. I'm starting to feel quite sick. But yeah, so I'll just leave you with the with the trading model I would be using for this week. I did mention it before, but in case some of you guys didn't get it, look for coins that are trading below the 200 MA. Look for these energetic moves to the downside once it's kind of retest. Like you can see here, dot retest the 200 MA and rejected off of it. So, and then pull your fibs from the swing high to swing low. If it lines up well with the fair value gap and the bearish order block, set some entries. Just set some entries. See how you go. Thanks for listening in. I do apologize that this was shorter than usual. I might do another stream on Thursday once I'm feeling better. I'll get the day off on sorry, Friday. I'll do a stream on Friday and Saturday most likely when I'm feeling better, and we can hopefully the market looks better as well, because at this stage, you know, I don't really like to look for shorts in bull markets. We're definitely still in a bull market, but shorts are more valid at this point. I'd be looking at, as I said, look for coins that are trading below the 200 MA on the 4-hour. Look for retracements to the upside and look to get in at fair value. I'll catch you guys next time.